Today was day 6 of my $476.90 small account challenge, and today I was only able to make $26. Let's see what happened.
I understand it now. This is a play off a 1 minute fair value gap, which is that white box down there. Now, if you take note, price bounced off this fair value gap a couple times on the 5-minute chart, and heading down to a lower time frame being the 1 minute chart, we can see that it also bounced off a few times. Now, what I'm doing here is I'm drawing a few lines to mark out potential support and resistance, also known as a symmetrical triangle. So that's one confluence. The second confluence is the 9 EMA and VWAP are tightly below price. Third confluence being just the fair value gap being right there. So I'm looking for the first 5-minute candle to make a new high. There we go. We break the high or that pivot point on the 5-minute chart. My 1-to-1 risk to reward ratio was set at $15.08. Some people may be thinking, well, you're already up over $1 a share. Why not just sell it? That's because stuff like this may happen. It may blow. And why would I sell it before I get to a 1-to-1? Like if I risk $30 a trade, why would I sell it to only make 15, for example? So nonetheless, I took partial profits up there when we spiked. My 2-to-1 risk to reward ratio was up at $17.40 something cents. We hit it briefly, but we bounced back pretty quickly. Now I'm kind of tweaking my strategy, seeing if I want to sell as soon as we hit like a 2-to-1 or a resistance point, or if I should be selling when we make a new low on the 1-minute chart, for example, like if we break a previous low. Let me know what you guys think. This time I kind of played it to make a new low. So once price printed a pullback candle and then we printed another green candle or upwards candle, the low would be my stop loss. So for example, the low is right there at the bottom of that white candle, and we do end up pushing down. So I did get stopped out of this one. So I took a nice little win on my first trade of the morning. So on to the next. My next trade had kind of the same idea, except this is a 5-minute fair value gap. So the 5-minute fair value gaps will be the blue ones. The 1 minutes will be the white ones. So I'm kind of thinking the same thing. That was the first candle that we had close above the 5-minute fair value gap and provide a pullback. As you can see, the one before that we did break and we made a new high on the 5-minute, but we didn't. That high was made before it had a pullback into the fair value gap, if that makes any sense. So this one was the first one that broke and held over and gave us that pullback. Here, I'm looking to adjust my stop. I put my stop at $21 even because I noticed that was the recent low on the 1-minute chart, and I'm getting edged I'm getting edged real bad. Luckily, for a brief moment, real edging right there, it pops back up